Welcome to The Explainer. Today, we're breaking down the 10 largest public companies on the Indian stock market, looking at the numbers as of January 2026.
Here's how we'll do it. First, we'll get a quick snapshot of the market climate. Then, we'll count down the top 10 in a few segments. And finally, we'll wrap up with some key takeaways on what this all tells us about the Indian economy right now.
All right, first things first. Before we get to the companies themselves, you really have to understand the environment they're working in. So let's set the stage.
So the year's gotten off to a pretty cautious start. As you can see, the benchmark Nifty 50 index is down just over 3% so far, and that really reflects some of the broader economic uncertainties we're seeing around the globe.
But that overall index number doesn't really paint the full picture. When you dig in a little deeper, you can see a pretty clear split. On one hand, sectors like realty and pharma are actually in the green. But on the other, some of the traditional heavyweights like consumer goods and energy are definitely feeling the pressure.
So with that backdrop, let's kick off our countdown of India's biggest companies. We'll start at number 10.
Kicking things off at number 10 is the infrastructure giant Larsen & Toubro, or L&T. They're coming in with a market cap of 5.7 lakh crore rupees and are really positioned as a direct beneficiary of the government's major push on capital spending. So, their story is pretty straightforward. The company's growth is basically hitched to India's infrastructure boom. They have a really strong order book thanks to all that government spending. The big challenge for them, though, is always the risk of delays when you're dealing with projects of this massive scale.
All right, moving on to number 9, we have the consumer goods behemoth Hindustan Unilever. With a market cap of 6.1 lakh crore, you can see it's had a bit of a tougher start to the year, which is right in line with what we're seeing in the broader consumer goods sector.
For Hindustan Unilever, it's all about consumer spending. Their growth really hinges on two things: a solid recovery in rural demand and consumers continuing to trade up to more premium products. The big risk, of course, is that persistent inflation could start to squeeze household budgets and hurt sales volumes.
Coming in at number 8, we have Bajaj Finance, a real leader in the non-banking financial space. They're boasting a market cap of over 6.5 lakh crore. And just look at that high return on equity of 21%. They're a major player in consumer loans.
So, what's the big picture here? Well, it's really a story of super fast growth in digital and consumer lending thanks to a very diversified loan book. But that high-growth strategy comes with a constant risk, the possibility of tighter regulations from the Reserve Bank of India, especially when it comes to unsecured loans.
Holding down the number 7 spot is the global IT powerhouse, Infosys, with a market cap of 6.71 lakh crore. And two numbers that really jump out here are its impressive 30% return on equity and a pretty healthy dividend yield.
Infosys is clearly betting on the future, making some smart strategic acquisitions in artificial intelligence. But here's the thing, their success is still very closely tied to the economic health of their biggest markets in the US and Europe. That makes them really sensitive to any whispers of a global slowdown.
Okay, let's crack into the next group. As we move up the list, you'll see just how much banking and IT continue to dominate the top ranks of the market.
Breaking into the top 6 is the State Bank of India, with a market cap that's getting close to 9.3 lakh crore rupees. As the country's largest public sector bank, it's showing solid performance so far this year, and that PE ratio under 11 suggests a pretty attractive valuation.
You know, being a state-backed bank gives SBI a pretty unique role in funding national infrastructure projects. And while they're modernizing with their Yono digital app, asset quality is something you always have to keep an eye on, even though it has been improving. For many, this makes it a real value play for the long term.
At number 5, we have another banking giant, ICICI Bank. And look at that, they've just crossed that massive 10 lakh crore rupee market cap milestone. They've also shown some pretty resilient performance this year, with a gain of 3.5% so far.
So where does ICICI's strength come from? Well, a big part of it is their diversified portfolio, which includes a strong insurance business and their really aggressive push into digital banking. This puts them in a great position to benefit from a broader economic recovery. Of course, like any bank, their asset quality is still exposed to risk if the economy slows down.
Just missing out on the top 3, we find India's largest IT firm, Tata Consultancy Services, or TCS, with a market cap nearing 12 lakh crore. And the standout number here has to be its remarkable 49% return on equity. That's just incredible.
You know, with numbers like that, it's no surprise that TCS is often seen as a sort of defensive anchor in the tech world.
It's managing to weather global slowdowns by landing major contracts like the big one with BSNL, which really shows just how robust their deal pipeline is.
All right, this is it. We've reached the summit. Let's unveil the top 3 largest companies in India.
In third place, we have the telecom leader, Bharti Airtel. It's really been a standout performer, with a year-to-date gain of over 13%, which is fantastic in a market that's been pretty quiet otherwise. Its market cap now stands at a solid 12.7 lakh crore.
So, what's driving Airtel's growth? It's really being fueled by 2 key things: the nationwide 5G rollout and its ability to increase that crucial average revenue per user, the ARPU number, through tariff hikes. This is what gives it an edge, even with all the intense competition in the telecom space.
And in the number 2 spot, our runner-up is the country's largest private sector bank, HDFC Bank. It has a truly formidable market cap of over 14 lakh crore and a very strong 18% return on equity.
Now, after its massive merger, HDFC Bank's scale is just immense. The primary challenge for them now is managing profitability as deposit costs rise and keeping a very close eye on non-performing assets, in other words, bad loans, especially in their unsecured loan book.
And finally, holding down the top spot as India's most valuable company is the diversified conglomerate Reliance Industries. Its market capitalization is nearly 19 lakh crore rupees, making it the undisputed leader of the pack.
You know, the story of Reliance today is really one of incredible transformation. While its traditional energy business has to deal with market volatility, the real growth drivers now are the dominance of its geo-telecom arm, its massive retail expansion, and its huge investments in new energy.
Okay, so we've walked through the entire top 10. What does this list of giants actually tell us? What are the big takeaways here?
Well, if there's one thing that just jumps out, it's the sheer dominance of 2 sectors: banking and technology. Think about it. Together, they account for 6 of the top 10 spots. They are truly the backbone of India's modern economy, driving both credit growth and digital transformation. And yet, the mixed performance we've seen shows that even these titans are navigating a pretty cautious market.
And that really leaves us with a final thought. Leadership at the top is always changing, it's never static. As India navigates all these global shifts and prepares for its next chapter, the big question remains: which of these giants will be the one to lead the next wave of economic growth?